Hello, today is the 20th of February 2010. Video is entitled The US Dollar Index and Silver. This is not the dollar index, but it's the dollar itself because it's the coins. Now, I took the mintage from the United States coin production. The link is on the top of the screen, and I imported the data. And using some calculations, I came across that from 1916 to 1964, 4.1 billion ounces of silver was used within the coins. Now, whether these silver coins were melted and reminted again, as an example, say a 1922 coin that later became a 1945 coin, I don't know. But the total mintage is what you see in here. You had a big run up at the earlier part of the 1920s, and really nothing in here because, well, there was a Great Depression, and then they were really going off the gold and silver standard. At least they went off gold standard in 1933, in my view anyway. And 1957, and then you got 1964. I got the numbers on here. It works out that in 1964, with 4 billion coins within the 10, 25, and 50 cent denominations, that with the population at that time, each citizen would get about 20 coins, whereas in 1957, it was 2.5 coins per citizen within its population at that time frame. So I find that a little interesting, and I point this out because, quite frankly, if 2 billion is the bullion inventory or the investment inventory of silver, and we have a population of 6+ billion, that means the average Earth citizen has about 10 grams of investment grade silver, which is 1/3 of an ounce. So yeah. I also went on the internet and I found this site. I was searching for basically the amount of silver eagles because I could do the same sort of thing. But I found this and I thought, I'll just post this now. This came from a Realist News. It was a posting form, or it's a message form. And they have this image of the annual silver eagle sales from 86 to 2011. I don't know if you can notice this or not, but it broke out in 2008. Maybe just because people were waking up to how currency was created then, that's my best guess. But not only that, but if you multiply this by the price that was the cost for each one, this chart would even be more phenomenal of looks anyway. Because if there's 4 units being sold here, at the average price, we'll say of about, we'll say 35, and that might even, we'll say 35. So 4 times 35, that's around 150. Whereas, say, in, I don't know, 2006, 1 times, like, 6 is 6, and, well, in 2000, you got, like, 5. These numbers were so much smaller because people were not buying them at the cheap prices, and now that they're just prices barely breaking out, they're starting to buy them. And I say barely breaking out because people like to sometimes talk about markets being overbought. Well, how about underbought? Quite frankly, if we're still well below the 1980 highs, which means we haven't recovered from that level, to me, that is being underbought. Let's now go on to the dollar charts. But again, before we do, this is an intro, and I posted the most richest president, at least according to an article on Yahoo Finance. This is, but mainly I just want to talk about the fact that he had more than 300 slaves. And that's because I can make my comment below, which I'll read now. It seems clear to self that historians and readers of history have little problems with civilians before the 20th century to be noted as slaves. These slaves were fed, clothed, and given shelter for their hard work. From my research, it seems that humans today have major problems with the label of being a slave to the fiat currency. Furthermore, instead of doing something about it, humans have used ignorant tools to convince themselves they are not slaves and pretend that things are fine just the way they are, while they pretend that the currencies have value and is worth keeping their face strong on the issue. Ignorance is bliss at times, and at other times ignorance is, well, that's a fill in the blank. Okay, let's get started with some of the charts. We'll start off with the dollar index in itself. And this is going back to its inception in 1972. I've talked about this before. 80 is a big level. Even the range between 80 and 90, pretty much big level. You can see here where you found support at the upper part of this range, and then you find support within this range, again within this range, again, but it's now looking as if support at this level is now becoming resistance as it's broken down below and really breaking down below here. Wow. And right now I'm also going to reverse this chart at a vertical level. And if you look at this, oh wow, this looks like a bullish trend. Once we break through here, it's all good to go. Now, quite frankly, when the dollar index goes up, then sometimes you see silver go down and vice versa. So that's what I'm going to do, is show the dollar index again, but vertical or reverse silver within it. So let's get started. And the first one we're going to do is this one here. This is from 2008 to now. So the price in the green is the greenback. It's the price of the dollar index. And the blue price is just the reverse price of silver plotted on so that the tops and bottoms match up. Meaning the highest price matches up here. And at the same time, ironically enough, the lowest price matched together in here. Therefore, what we can notice here, at least now, it's wow, something else, seeing how they're just trading collectively together amazingly. Now, since this rally has begun in here, well, the price of silver, it's went down, but really not as much as the dollar's been going up, basically. Meaning silver hasn't, the inverse silver hasn't made it up here. That's the best. And if it did, then we'd be seeing silver back at these levels, which would be about $22 an ounce or so. But no, we haven't been there. You also get situations where, well, here's a situation where from 2009, the dollar index had a huge gain, yet the same time frame, silver's just like going sideways. Well, let's expand this even more. We're going to expand this now to the 90s, I believe. 95, yes, we are. This is the 9-day chart. So it takes one price every 9 days for each the dollar index and the silver. This is from the freestockcharts.com. You get 9-day, 8-day, weekly, monthly. This is a 9-day for the dollar index and silver. And again, you can see, especially here, from 2000, the silver rally just really trending within the dollar. Really nicely, for that matter. Final one. Well, final one of the comparison, that is. We'll do an inflation one after this. Now what we got here in blue is silver, and in green is the inverted dollar chart. Plotted the exact same way so that the highs and the lows match up. Now you'll see situations where they're trading opposite within each other at different time frames. So when the dollar index, this is obviously going down. So when the dollar index went up from here to here, well, I guess, well, they both work together, yeah. But from here to here, we can see that the dollar fell. Yet from here to here, silver pretty much went down. Currently, they're pretty much at the same Fibonacci retracement level. I personally find that a little interesting. Final chart. This is inflation going back to 1795. Now the Fed came in pretty much around here. This is your 18 moving average. And this is the upper band. And it's designed so that markets don't trade above it. Unless, well, I guess this is the unless. Thank you for watching and take care.